With us, and I want to start off with one part of your notes that really stood out to me, given that we continue to see these horrifying numbers and pictures out of the pandemic situation in India, and yet you're actually quite constructive when it comes to Indian opportunities. Can you talk us through that?
Yes, thank you very much for having me back, Heidi. It's always a pleasure. We are long-term bullish on India for many reasons. India is a country which has a very low per capita GDP. It's just over $2,000. And that's the point at which other countries that have progressed beyond that point starts on an exponential growth path. So in China, for example, that was the start of about 30 years of growth. So on top of that, in India, you have a young population, and it stands also to benefit from the U.S.-China conflict. So because of that, there is enormous opportunity because of expected increasing consumer expenditure for many industries in India. So I'll give you some examples. Air conditioners and refrigerators, for example, have about a 10% penetration, plus minus 2% in India. In China, it's about 60% for air conditioners. The U.S. is about 90%. And the same is true, that same trend for car sales, for travel, smartphones, the internet, et cetera, which means that there is so much room ahead for India.
And in fact, you talk about the theme of beneficiaries of the US-China conflict, and among them are some of the other geographic opportunities across the region. Is the supply chain, particularly post-pandemic theme, something that you're focusing on?
Yes, we very much focus on companies that will benefit from the US-China conflict. So two things happen, or more than two things, but two important things happen because of the US-China conflict. One is that countries want to secure their supply chains. And so in the case of China, for instance, they want to make sure that over time they're able to develop a domestic chip industry. And that's going to take many years. In the U.S., it means that the U.S. will grow even stronger ties with countries such as Taiwan and Korea in securing its supply chain in chips. You know, the world is going extremely digital, and digitalization requires chips, which is why companies like Samsung and Taiwan Semiconductor are doing so well, because they are the future. They are the leaders in chips worldwide and have such a dominant position that is unlikely to be assailed anytime soon.
Belita, Japan was also being helped not only because of that story, but also because of the cyclical nature of its markets. But we have seen it under pressure this month. What's going on?
Japan gets no respect. It's a country which, if you look at the stock market for the last 10 years, in the developed markets, has done the best after the U.S. The U.S. has done the best of all by a big margin. But Japan really has undergone 6 years of corporate governance reform that has put in place the foundation for a much better stock market performance in the years ahead. So specifically, the share of foreign ownership has gone up. Cross-shareholdings have declined substantially. You have much better tax laws and governance practices that make it much more attractive for M&A activities, management buyouts, and you're seeing this, every week in Japan, where one company tries to buy another, and in the process make the companies more efficient. And this is something that's sorely lacking in the Japanese market and is now finally materializing.
Do you see any problem with how involved the BOJ is in the stock markets right now, especially them buying ETFs on the topics?
So this is an interesting question. I think it does warp the market slightly, because essentially if you're a big stock, you have a premium, because that's what the BOJ buys. It buys ETFs, the biggest companies. So it does two things. One is that it tends to make the larger companies more expensive. So for us, who are value investors, we base our buying on the intrinsic value of a company, so a good company that we can buy with a margin of safety. That tends to put us into the mid-cap category, where companies trade cheaper because they're not in the index. But if we're right and the companies compound growth over time, they then move into the larger cap sector, become part of the index, and then we get a bump in multiples. That's just, the nature of the beast. It's the most efficient way for central bank to be involved in supporting its market, and it's just something you'd have to deal with as a asset manager.